Okay, it's June 2nd. It's about an hour before the market opens. There's big volume in Frontline this morning. I don't know what's going on in there. The stock's down about 25 cents. Now it goes ex-dividend tomorrow. So there may be some kind of dividend strategy someone's doing in there, or there might have been some kind of downgrade that I haven't seen by some broker overnight. But as you can see, there was a significantly larger amount of calls that were traded yesterday versus the puts. So they did about 9,000 contracts. So there's a lot of call activity going on in there. We got implied volatility of 86% in the June contract just before the stock goes ex-dividend. Looks like on the open. But anyway, big move in the stock before the open. Not sure what's going on there, but a lot of volume trading in there. Already 250,000 shares. NAT is the second most active this morning, unchanged. Really low volume. If we look here, we can see that there's a big bump up in implied volatility in the July contract. We're going to look at that a bit later as well. EURN basically unchanged. Bid and offered at the same price. You don't see that happen very often. So before the market opens, they're quoting prices from different exchanges. How can you have the same price on the bid and the ask? Does anyone know? How does that happen? Let's look at the market depth. Let's see what that's going to tell us. Posit, it's bidding 6 in one exchange. Oh, now it's 10:02. Okay, so we just missed it. But as you can see, there's different exchanges down here, right? There's like 10 different exchanges. So somebody was bidding 10:06 on one exchange, and someone was offering it at 10:06 on another exchange. So there's potential sometimes for an arbitrage between those different exchanges that trade the same stocks. And this is where the market makers, that's how they make their money. You know, in other countries, you're not allowed to have fragmented markets like this to take advantage of retail investors. In Europe, you have to guarantee that your customer is always going to get the best price. And they have rigorous systems to ensure that they're always going to give them the best price possible. Here in the States, it's a bit of a joke. But anyway, that's what's happening with the EuroNAV. We digress. DHT. More calls than puts. You know, there was a point there where there was actually more puts than calls. So things are quieting down in here. Scorpio, 2,300 versus 700 yesterday. Not much happening. Tankers, nothing. We'll look at that today. NNA, they go ex-dividend today. 30 cents. So we should see the stock trade lower by 30 cents today. 573 minus 30. It should open up at 543 this morning, but it's not there right now. We'll see what happens on the open. And then we have earnings this week in TNP. They're the last ones, so we probably should take a quick look at them to see if there's something to do in there. So that's where the options are for yesterday, June 1st. This was the closing option activity for all these tanker stocks. June 2nd, and it's 11 in the morning. I tell you folks, it's time to buckle up and get ready for the next move down in these stocks. We've got a few downgrades today. They are killing the tanker stocks today. Frontline and DHT were the two stocks that were downgraded. Now, downgrades aren't that big a deal normally, but Fernley's is reducing Frontline's price target from $15 down to less than $6. That's a huge shift, and that's going to obviously influence all of the stocks. So if we take a look at the portfolio of peers and we rank them by percent move, we have NNA down 8%. Now they just went ex-dividend today, but this net change of 8% is after the adjustment for the 30-cent dividend that was paid. So people are dumping the stock after collecting their dividend, which is hard to believe, but you know, unless there's someone else who's downgraded that stock, it's hard to understand why it's down that much. So Frontline was downgraded. It's down over 6%. Okay, and then other stocks are trading lower as well. NAT is down to 430, man. It's down 3.5%. What was the low in March? Does anyone remember? So $1.66 was back in August of last year. So it actually got down to around 230 before it shot up to 9 within a month. So look at this. We're all the way back down. So, you know, if you end up buying shares here around 430, then the next averaging down is going to be right down here at around the 230 level. So you'll be averaging down again right in here. So this is a big move down. Now even EURN, which is really the best of all the tankers, it's still down 2% in sympathy to what's happening with Frontline and DHT. Now DHT is down 5% this morning. Moved the price target from $10 down to $5. So they've dropped price targets by 50%, right? And what's our average down level that we like to accumulate more shares is 50%. And look at Scorpio. They're also down another 5%. The CEO is going to be sweating now. You know, he's got 15 calls that expire in January of 21. And I think at these levels, he's going to start losing money on it. I think he put about 1.9 million into that. So that was a big position he put in there. So these stocks are getting hurt pretty bad. Let's look at our portfolio. Man, what do we do now, right? So there's not much we can do here. We're going to be sitting on our positions, but look what happened to Frontline. We're down and now we're up money in there. How did that happen? Oh, we sold an extra call in there. That's what happened in there. So because we had already had 3 tanker stocks in our portfolio, we did a strategy which was slightly neutral and slightly bearish. We added an extra short call in there because the vols were high. So here we go. You know, we've gone from losing money to making money in one day because of the stock being downgraded. You just never know with these stocks, right? One day they're recommending to buy them, and the next day they're recommending you to sell them. It's hard to guess where they're going to go from day to day. So we're making money in Frontline. And if you notice, we're missing 100 shares in here because this morning when I saw the downgrades in Frontline, I went ahead and took profits on the 100 shares that I had bought earlier. So I sold 100 shares for $9.92 and locked in like a $30 profit in those 100 shares. Now that's not the profit I want to have in a stock like this, but it was just an extra 100 shares I had. And given the pressure on the other tanker stocks, I do think EURN is going to trade down in sympathy. There's still the better tanker stock, but I have to look at this portfolio as one stock. I can't look at these as 4 different companies and put equal amounts of money in each of these. If I treat them all as one stock, then this stock should trade lower. So I just went ahead and I took a profit. I didn't take a loss, I took a profit in that 100 shares. And now I know that with the current position I have on here, unless the stock trades significantly above 10, I know I'm going to lock in another nice profit in here. So I know I'm going to end up with a profit in EURN, and I have a profit in Frontline. So it's really NAT and DHT that I have to be thinking about, like how am I going to tweak these positions to average down with the stock trading a lot lower. But this is what happens, you know, brokers come out and downgrade your stocks, and this is what you got to worry about. It's hard to predict what the stock price is going to do from day to day, but look who's performing really well today. It's oil again. Right? And so oil just keeps moving higher. Right? And we know there's other data that it can influence what's going to happen in the tanker stocks, but let's take a look here. For the July contract, we're up 70 cents in the futures contract, and people keep talking about the contango spread. So if we go from July and we go out to June of next year, okay, if we go out to June of next year, it's 38.50. Okay, so this contango spread is getting narrower. And if oil gets above 40 in the front month, then you're going to start to see backwardation again in the oil futures. So there's really no more trade in here in terms of storage for tankers. So if there's a lot of people invested in tankers because of the super contango spread of $29 and now it's $2, those people are going to start unwinding those positions and they're going to put pressure on these stocks. So there's some trends happening right now which don't bode well for the tanker stocks. Now the other trend we've seen is with passenger traffic. So if we look at the TSA data, what we'll see is that the TSA data continues to show more and more people flying. So as more and more people start flying on the airlines, it's going to be more gas, more jet fuel consumption. This is all going to influence the supply of oil. And as the supply of oil dwindles, either through production cuts or more consumption, it's going to take away the enthusiasm to own the tanker stocks. So that's what's happening right now. Just remember, broker downgrades can influence the stocks for a couple days. This probably create an opportunity for us to look at averaging down where we're at least 50% below our initial investment. So that's what I'll be looking at this week, is where could I potentially be getting long at 50% below my initial buy level. So good luck out there. We're going to go through the questions from June 1st, Monday, and we're going to move quickly through these. So question from Master Mega. He's got 140 shares of Frontline. Do you recommend adding more before the stock goes ex-dividend? And my answer to him is, look, it doesn't really matter about the dividend. The stock is going to adjust, reflect the dividend, right? And no one knows where the stock's going to go. So if the question is, should I buy the stock to get the dividend? Even if you buy the stock to get the dividend, the stock's still going to go down. You don't want the tax implication of regular income, which is where dividends fall. Then you would wait till after the dividends paid for the stock to go down to reflect the dividends paid, and then you would buy the stock. Would you recommend DHT? So I'm not excited about this stock. I like EURN more, but I'm long the stock. And I don't like to try to predict where the stock price is going because it's random, right? There's really not much you can say about it. Last night, what I was saying is, look, I'm concerned about Q3. The group will be under pressure once people look beyond Q2. And I was saying that, look, if I was an analyst, I am not an analyst, but I am a retired chartered financial analyst. But if I was working for a securities firm, I would be looking to downgrade the group. And the reason being is because of Q3 and the fact that the stocks had run up. If we do see downgrades, then DHT can go much lower. But markets are random, anything could happen. So we just got to stick to the strategy, which is, look, we'll just average down every 50% lower, and eventually we're going to be right. So great video, okay, and then loved it. And then, David asked, where did you gain your experience and knowledge? Okay, well, I spent a career advising brokerage houses, hedge funds, banks on how to use technology tools and information to invest in the markets. I'm a retired CFA, but this doesn't matter. The markets are random. So what I've learned after 35 years of investing is, look, no one knows where they're going to go next. So what's important is your basic money management strategies, which is just averaging down 50%, staying small, and then you could have an opinion. The same way that I'm concerned about what happens in Q3. But that still doesn't mean the market's definitely going to go down or go up. I would rather that investors just stay humble, know that no one can predict where it's going next, and use your money management techniques to ensure that by the end of the year you're profitable. Like tankers, even though they have a bad balance sheet with a lot of debt, because of leverage, they can overperform in this oil super contango. We're going to look at oil today. So 1 year contango spread is only $2 now instead of $29. So you can't call this a super contango anymore. It is contango, but if oil gets over $40, it's going to reverse to backwardation again. Shares at 540 cost. So if you're in at 850 shares at 540 cost, divide that by 2, you'll be averaging down at 280. That's it. Question around the riots being bad for using crude. Yeah, possibly, but I don't think the riots are going to have that big of an influence what happens with tanker stocks. When will NAT go back to $5 a share? No one knows. You shouldn't try to predict it. You should just let the market do what it's going to do. How long do you think a short squeeze would last? I mean, normally if you have a short squeeze, they usually last about 3 days. on average. If you look historically, usually about 3 days. I think dry ships was over 4 days for that epic move 25 times higher. Normally they're around 3 days. With the Q2 earnings call option play, I'm curious about what IV you'd recommend selling at. I'm out in October and beyond. I wouldn't sell premium that's less than 100% vol, but I'd still look at the premium itself and make sure that you're at least getting $1 in premium if you're shorting options. If you're shorting options and you're shorting for less than $1, I mean, your max gain is $1, but your risk is unlimited depending on what strategy you have on. So you also need to look at the profit relative to the risk. If you have no risk, then you're willing to take a smaller profit. So for example, in EuroNav, I'm willing to take a smaller profit in there because it's effectively risk-free. So I'm willing to take a smaller profit in there. But if I had real risk in it, then I wouldn't do the trade unless there was significant profit in there that reflected the risk. Take a look at TNP earnings coming up this week. Yep, good idea. We should take a look at them. And then Clinton is saying that the 8K per day cost that the NA chairman refers to is actually the cost for idle crude storage. So it's not the normal day cost of running a ship. So that would make more sense if that's the case. So that's an interesting point. That's an interesting data point to take a look at. It also means that if a ship is left empty and it's not doing anything, it's probably also costing $8,000 a day. So it's kind of like a sunk cost we're looking at per ship. Is one way to think of that number. I have Frontline share float at 200 million against your 98 million. Okay, so there's the difference between how many shares are outstanding and then how much is the float. And so the float is you take the total shares outstanding, which is the 200 million that John referred to, and then you take out all the insider shares. Frontline insiders actually control the stock. They actually own more than 50%. So you end up with 98 million free float. So those are the shares that are readily available for short sellers and others to play with. That's called the free float. Okay, so David has two questions. One is selling put premium just before it goes ex-dividend with options expiring on the 18th. So there's no free lunch in there. So if you're selling premium just before a dividend, you're going to find the stock gets adjusted down. And so that what you think is a big premium you're selling in the puts is going to disappear because the stock's going to go down. So there's basically no free lunch in there. The option market makers know what's going to happen to the stock. So there's nothing there for you to take advantage of normally. But you may find something that can be explained through put-call parity and then being out of whack, and then you can take advantage of it. Second question is, I don't want to average down at NAT when there's other companies with a better valuation. And when you look at book value, the other stocks are cheaper than NAT. So like I've said before, I look at the whole tanker industry as one. I have no problem with you averaging down in a different stock as long as that stock is down. What I don't like to see is when people say, okay, NAT's down and I should be averaging down, but I like this other stock, Frontline, because it's gone from 7 to 940 and I want to buy it at 940. Right? So you just don't get caught up where you find yourself always buying the stocks that are moving higher, which is what happened to a lot of people with NAT to start with. You know, they had fear of missing out and they bought the stock when it was at 8. Every strategy that you deploy has a risk and a reward around it. If there's easy money to be made, then there's very big losses also to be incurred from time to time. So just remember there's no free lunch on all these strategies. There's going to be a risk reward around each one of them, and you just need to understand what you're giving up whenever you have an opportunity to make money in one of those. Okay, so that's it real quick, and feedback down below. Think about subscribing if you want to be a part of our journey on learning how to invest in the market. Thanks.